The transition to land is it's been very interesting. I learned that I don't like having a venture backed startup. That I like using my own balance sheet and having the freedom to grow organically or right size and not be sort of constrained to grow artificially. That was one thing I've learned. I like land as a better asset class. Why? I own, look, my wife and I own a portfolio of single family rentals. And I still get calls about water heaters breaking or this, a tenant having an issue with the neighbor, all this stuff. With land, there's no rodents, tenants.
Joshua Kagan is a real estate and fintech builder with true startup in DNA. Over the last 14 years, he's worked across fintech and real estate with a focus on expanding access to ownership for everyday people. He's best known as the co-founder of Bonfire, a platform built to democratize access to real estate investing, and is now leading Friendly Acres, a land-focused venture designed to help people both exit stranded land assets and enter property ownership through affordable pathways. Today, we're talking about land as an entry point to ownership, democratize access to real estate, and what it means to build asset pathways in a world where costs and barriers keep rising. Joshua, welcome to the show.
Thanks, Lance. It's an honor to be here.
Let's talk about the builder story. You've built multiple ventures from the ground up, starting with your first fix and flip and eventually launching platforms in real estate and fintech. What originally pulled you into real estate as the asset you wanted to build a career around?
Oh, great question. I think it was really seeing my stepfather, who's been in real estate for 50 years, and um, taught me that real estate. I just saw that real estate is a get rich slow business. That there's not a lot of gimmicks and quick wins, but if you are slow and steady over a period of time, you can have a nice amount of passive income, which ultimately is wealth, because passive income provides the ability for people to have freedom of time of what how they use their time. And so I looked at that as an opportunity to, really buy back my time.
Nice. How did that first fix and flip change the way you saw ownership and long-term wealth then?
Oh, it changed my life. It's 2011. I was living in the San Francisco Bay Area. I knew that I wanted to buy a foreclosure, and this property came up in the Berkeley Hills. The lot next door was actually also for sale. It was a really weird short sale. It took 9 months. I didn't have the money for the down payment. I had to borrow it from my mom and stepdad. And I qualified for a mortgage because I had a W-2 job, bought it, repaid them over a period of 5 years. Had to roll up my sleeves, figure out how to fix it, rent it. I had tenants in it. That was my first sort of burr strategy. And then I bought another one, and then I started doing tear down rebuilds, which honestly aren't for the faint of heart. I've learned the hard way that my superpower is not construction management, which feels like a critical component to doing fix and flips. So I've kind of like paused on doing any tear down rebuilds these days.
Gotcha. So let's talk about your path from Bonfire to Friendly Acres. Bonfire was founded to democratize access to real estate, and Friendly Acres represents a new chapter focused specifically on land. So what did you learn through Bonfire that ultimately led you to focus on land as the next access point?
Oh my God, I've learned so much. Made so many mistakes that how can I how can I not but learn, you know? Oh, it's a great question, Lance. I think for me, coming out of Bonfire, let me give some context for those of you who don't know what Bonfire is. We launched Bonfire in 2022 as a platform to enable everyday investors to invest into commercial real estate assets, the way that you could buy a stock. You could buy a hotel, a piece of a hotel, piece of an office building, etc. And we were using tokenization, blockchain technology, not crypto, but blockchain. And in November of 2022, right after we launched our MVP, FTX imploded, and crypto became a four-letter word, even though it's 5 letters. And our securities council came back to us and said, guys, the structure that we propose, the tenancy and common structure that enables unaccredited investors to invest in your deals, isn't going to fly with the SEC, and we have to move towards a sort of Reg D offering. So for those folks who aren't familiar with securities law, that means that we can only sell to accredited investors. That changed our entire dynamic of our company, right? Because we moved from really wanting to democratize access to commercial real estate to only being able to service accredited investors who are, 10% of the US population, right? 90% of people can't invest in venture capital, private equity, or institutional real estate because they're not considered accredited, which is a whole other conversation. I think it's pretty arbitrary in a way that the rich stay rich. But putting that aside, the transition to land is it's been very interesting. I learned that I don't like having a venture backed startup. That I like using my own balance sheet and having the freedom to grow organically or right size and not be sort of constrained to grow artificially. That was one thing I've learned. I like land as a better asset class. Why? Look, my wife and I own a portfolio of single family rentals, and I still get calls about water heaters breaking or this, a tenant having an issue with the neighbor and all this stuff. With land, there's no rodents, tenants. Even if a big rainstorm happens, it dries. So there's not the maintenance aspect of it. And I think we have an opportunity to help people both provide liquidity to a stranded asset for a lot of folks. I can walk you through how that's happening, while on the other side of it, help people who are pretty locked out of our financial system, who have no ability right now to own tangible assets with a pathway of ownership. And both really excite me.
Let's hone in on, you said that you believe land has become a powerful and overlooked entry point for people that feel locked out of traditional real estate.
I do.
Walk me through that.
Yeah. So imagine, you live in Bentonville, Arkansas, where the median housing price is, I'm just gonna make up a number, $1 million. So to even qualify for a mortgage, you're gonna have to come up with $300,000 down payment. Anyone, right? Or the median housing price in the US is roughly $400,000. So 20% down payment is 80,000, right? Well, you think about people of our generation, and we were sold this sort of belief that you have to go to college, and people go to college nowadays and they leave with a tremendous amount of debt. So people are starting their careers already behind the eight ball a bit, and so, the ability to buy a house or a duplex or an income producing asset is hard without a nest egg, without that down payment. Now, with interest rates that have doubled since 2022, right? They went from around 3.5% to now 6.5%, 7%. It's even less affordable to buy a house, right? So there aren't a lot of entry points where you can put $100 down and actually own tangible real estate, and land is one such mechanism. Now, you have to buy smartly or correctly. Not all land's created the same, but that's the same with all real estate. So yeah, it's just much lower entry point.
It sounds like you've got some really strong feelings on empowering everyday individuals access to quality investment opportunities that are real asset supported and backed with tangible assets. Tell me more about that.
So I read yesterday that SpaceX is going public next year at an implied valuation of $1.5 trillion. So that will make Elon Musk the world's first trillionaire, right? So one human being with $1 trillion, and yet half of our country can't make a $500 emergency payment if they had to. Think about that, right? Um, I used to volunteer at a homeless shelter in LA that helped homeless people get jobs. It's called Chrysalis, wonderful organization. And I met, we were doing job interviews and mock interviews and writing resumes. And what I learned working with these folks was like homelessness, not, I don't want to make a broad statement, but by and large, people become homeless because a spouse gets sick or some sort of thing happens and they have to take care of them and they lose employment, right? So I say all this because in the last 20, 30 years, the uber wealthy in our country, the amount that the 1% owns, has got the percentage of ownership is staggering. I don't know the numbers, right? Is it 30%? Is it 40? Is it 50? I don't know. But the reason why they've gotten so wealthy is because their assets, whether it's their stock portfolio or real estate or private equity or venture capital investments, have gone through the roof. Well, when 90% of our country is not allowed by law to invest in these vehicles, I mean, people can invest in stocks, but they can't invest in private equity, they can't invest in venture capital because the government's trying to protect them from making bad investments. Yet these same people are allowed to buy lottery tickets and go piss away their life, earnings or their life savings in slot machines. something seems a little bit off, you know?
So true.
And it's an arbitrary distinction of what makes someone an accredited investor. It's based upon their liquid net worth and how much they make per year. But imagine, Lance, if you had to get a driver's license and it was based upon your wealth and not your knowledge of driving. That's what's so crazy to me. Someone who is smart and done their homework and decides to invest in something should be allowed to invest in it. It just makes no sense to me at all. Anyways, I get really riled up about this topic.
No, the topic is worth spending time on, and I always enjoy hearing someone's perspective because it truly is one of those things that access makes a difference. You described land as a stranded asset on one side and an affordable on ramp on the other. What problems are you solving for sellers through friendly
Yeah,
acres? And what opportunity are you creating for buyers through smart land
yeah,
investors?
yeah. I'll give you an example. So I put out 10,000 letters a month to folks around the country who own land, and I offer them a way out. And we use average pricings based upon zip codes and stuff, and sometimes we overprice it, sometimes we underprice it, but we're really trying to go with a Goldilocks sweet spot of a price that's fair and reasonable to someone to be able to sell it in 10 days, 14 days, and not have to go through a real estate agent and pay 10%, 15% commissions, which they are in the land business because the prices are so much lower, right? So I'll give you an example. There was a woman, I won't say her name, whose partner, her husband, had terminal cancer. And she literally said that like my offer letter was a godsend because she's really, really struggling. And the number of conversations I've had with folks who are like, I've been paying property taxes for years. This asset, I inherited from my parents. I'm sick of paying property taxes. I'm not going to, realistically go out to Nevada and find a real estate agent, and I'm just going to give it back to the county. Right? We're giving them an opportunity to take this equity, this value, and monetize it in a way that they otherwise wouldn't. That's through Friendly Acres Land. Smart Land Investors is a different platform. We're all about educating people as to what it takes to analyze land. We have a entire checklist around which we'll be releasing a lot of educational materials in the new year around, how do you analyze comps? How should you think about population growth? Why is it important to look at slope? Does a FEMA flood zone matter? Things that are related to the property as well as a geography. And we only buy and sell properties that fit our checklist. So we're enabling folks to buy good properties. We provide seller financing, 10-year seller financing, sometimes with as low as $99 down payment. The biggest obstacle we face on the smart land investor side is people say, wow, this sounds too good to be true. What's the scam? Which I can live with, right? Because we should all be skeptical of anything that we don't know of, right? That can be overcome. But we think that this platform is an opportunity for a lot of people who currently don't own real assets to get on that trajectory of asset ownership.
You mentioned $100. Why is lowering the barrier to entry so important for helping people start building assets instead of staying stuck in renting or just consuming?
It's a great question. Look, I'm not going to say that buying makes sense over renting always. There's certain situations where it will be cheaper to rent and it might not make sense to buy, especially if the monthly payment's very high. But anything we can do to use creative financial structures to enable more people to participate in our financial system leads to a more inclusive economy, an inclusive world. I mean, the world's a better place if more people are participating in it, and that's from a number of different perspectives. That's from a capitalist perspective, right? More people participating in the economy creates more abundance. And we think that lowering the down payment is one lever we can pull. Another one is keeping interest rates low, lower than what people would get if they could find lend a bank that would lend to them or hard money lending. Um, it's there's a lot of ways one can make money without squeezing the last penny, out of a deal. Um, and that's kind of how we look at it.
A big part of your mission is now education, not just the platform for the asset. Why do you think the knowledge gap around real estate and land ownership is still so wide?
I think that there's some entities out there who will sell you very expensive education. for $10,000 or 50. I mean, I've been pitched by a lot of these groups. Um, some of our competitors who have land educational platforms are focused on, people like me who are sort of more professional investors, but there's not a lot out there that I've seen that are focused on helping first time buyers. Maybe there's less money in it. I don't know. But you know, I I think that when you empower people with education, you give people choices that they otherwise might not have. And I don't know, you pay it forward. It all comes around one way or the other. We have no interest in creating any sort of coaching program where, we charge people 10,000. Like that's not on our roadmap at all. We want to just give away basically our blueprint and help people get on this ownership pathway that I've been really fortunate to be on.
What are the first principles that you want everyday people to understand before they ever buy land or for those looking to sell?
The power of compound growth. What happens when you invest, pick a number. It doesn't matter. $1,000 a year at 8%, compound growth turns into an incredible amount in, 10, 20, 30 years. Time is on your side in real estate. And that's why it's the get rich slow business, right? It's not gimmicky. There's no meme coin involved. There's no get rich quick schemes. It's slow and steady, but there's a reason why 90%, I've heard, 90% of millionaires in the world, um, at least made part of their money through real estate. I mean, it's the most consistent way to make money because if you think about the fact that the human population increases by 1 million people every 4.5 days, and it has been for decades, and it will continue to, right? But they're not making any more land. They can go vertical, but they can't go horizontal forever, right? And so land is inherently scarce, right? They're not going to make more of it. So I'm super bullish on land long term, and I think so the basic principles are around understanding compound growth, understanding buying in the pathway of development. You want to be in areas where there's population growth, both at a state level, in a county, in a sub county area, and understand other employment opportunities that are going to arise in that area. That's sort of on, like, I have this kind of 50-50 rule of, like, 50% of the value is, I know everyone says location, 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 but I think it's 50% sort of location and high level and sort of deep level, like what area, what county, what zip code, but also the property itself, because you can have two properties next to each other that if one's super sloped and the other's flat, the values are going to be completely different. If one's in a flood zone, if one isn't, if one has soil issues. I mean, so people need to understand all that goes into analyzing a property and some of the pitfalls, because you can make mistakes, and those are painful mistakes. And I've made them before.
At Planet Wealth, we focus on empowering entrepreneurs with capital access and creating curated investments for everyday people. How do you personally define democratized access to real estate? And where does land ownership fit in that future?
Land, democratization of real estate to me means us returning to our roots in the American dream of this country, of all of us being able to own land and property, if we want to. And that American dream has really become an American myth over the last several decades, with higher interest rates and student debt and all the various, big corporations buying up a lot of, private equity buying a lot of the single family homes, et cetera. So, to the degree that we can make it easier for anyone who actually wants to own tangible real estate too, then we're servicing this mission of democratizing access. And land fits right in there because it is an opportunity to give people access at a much lower price point than currently exists with other forms of real estate.
You guys are facilitating the exit of land into smaller investments across a larger group of individuals. Is that correct?
So there's a number of different ways we're doing it, Lance. Like, for instance, like I just closed on a 40-acre tract that I'm chopping into smaller pieces that we'll be able to
Okay,
sell off.
okay.
But that's one example. But by and large, I buy an acre, you know, and I sell it to someone else using, giving them seller financing, which they historically wouldn't have access to. So they don't have to pay the entire amount up front.
Awesome. Okay.
Um, it's curated though, and they all have to fit our checklist of what goes into, what makes a deal a smart land investment.
Joshua, how do hand selected investment opportunities help people move from curiosity into actual ownership?
Well, I think it depends on what the hand selected investment opportunities are. Like if you go to platforms like land.com or Zillow, they'll put anything on the platform that people are willing to pay to have on the platform, right? I think smart land investors were a little bit different, that we are providing a checklist of all of our properties that have, been selected based upon rigorous criteria. And so people can see, oh, this is what the population growth is in that area. This is what the slope is, or is in a flood zone, and be able to make better choices for themselves. But I think also the fact that our down payments are so low, we provide 10-year financing, our interest rates are relatively low. I think that also really helps people, get on that ownership pathway.
You've talked openly about privilege, timing, and essentially how many people never get a launch pad into ownership. What advice do you give those who see gaps in the system but feel unsure where to start?
I'd recommend, creating a minimum viable product or a proof of concept or some small test to sort of validate or invalidate a hypothesis. But you know, bear on the err on the side of action and not overthinking. I see a lot of entrepreneurs sort of get stuck in analysis paralysis, where they're sitting in a room with a whiteboard and just constantly iterating in their minds. But until you get something in front of a customer, you don't really know if it's going to work or not. So, yeah, getting something out quickly is what I would recommend.
What does following your curiosity look like in practice when building something new in a regulated and capital intensive space?
Oh, it's a great question. I truly believe that for me, fulfillment arises from following my curiosity. I mean, that's what led to me to spend my junior year abroad in Nepal. I lived in a village. It led me to moving to England for graduate school, to jumping on a plane to Turkey and asking this woman to come move to San Francisco with me, who's now my wife. And, I've followed my curiosity at various points in my life, and it's never let me down. um, there's that voice that tells us, oh, we can't do that, or we don't have the background or the money or the skills, or there's always that sort of nagging, like, negative voice, at least for me. And I've had to learn through various different practices how to, like, kind of set that aside and say, no, but I'm curious about this thing. Like, I want to go check it out and get my hands dirty with it. And I'd encourage other folks to do that too, if they feel so inclined.
I agree. And the way I look at it is the fact that someone's willing to do the work is what gives them the right to pursue an opportunity.
What do you mean by that?
That so many people look at opportunities, or they may think that there's an opportunity there, but they don't pursue it because, you know, maybe they're not the perfect founder whose life experience gives them the unique potential to be the one person that could pursue this and be successful at it. And the truth is, in most things in life, doing the actual work to pursue it is what actually matters. It's dedicating yourself to do the work and persevering through is more important than anywhere that you went to school or any network you have or any previous experience you have in that field or sector. At the end of the day, the work is what drives the outcome.
Wasn't it Edison who said that genius is 1% inspiration and 99% perspiration? I think there's like this myth in our culture, Lance, of like the heropreneur, of like, oh, this guy or gal had this idea and it was so clear and they just did it and it was easy for them. It's like, no, like, you talk to other founders and it's like you're signing up for struggle, but it's through the struggle, it's through doing the work that we learn. I mean, like, whatever success I've had in my life has been backed by like 10,000 failures and mistakes.
You really hinted at some incredible life stories there. I like to end our episodes with a fun anecdote about my guests. Share a story, a fact, or an experience about yourself that our listeners would find entertaining or unexpected.
So I went to college, a small liberal arts school called Wesleyan, in Connecticut, and I spent my junior year abroad, as I mentioned, in Nepal, first semester. And at the time, Nepal was the second poorest country on earth, per capita GDP. and I lived with a family on the outskirts of Kathmandu with no electricity, no water. Okay. I used to shower either by kind of taking a little bucket from like the coldest well you've ever experienced, or if it rained hard enough, the rain would come so hard off the tin roof and I'd bathe in that. Right. And despite coming from a place like Los Angeles, where there's a lot of wealthy people, the wealth that I saw in Nepal, I've never seen to this day. And that is people had community, they had joy, and they had a sense of interconnectedness. And even though materially they didn't have a lot, right? The average person made $350 a year, they had happiness. And that's something that stuck with me the rest of my life, Never had any aspiration to be the richest person in the cemetery. But being able to connect with people and learn and share, that's what gives me joy.
Joshua, thank you for sharing your story and your vision for expanding access to ownership through land. Your work truly highlights that innovation does not always mean complex technology. Sometimes it means finding the simplest entry point and opening the door for people who've been shut out. Folks, if you enjoyed this conversation, subscribe to Planet Wealth on YouTube or your favorite podcast platform. Leave us a comment and let us know what stood out to you. I'm Lance Woodson. Thanks for listening to Fortunes of the Brave.